A lot of video ask what is the best time frame to trade the forex market, and some of video ask what time frame do I use. So right in this video, I'm going to be answering those questions right in this video. So selecting a particular time frame depends on the style of trader you are. So whatever style of trader you are, that will determine the type of time frame you should be making use of. Right in the forex market, we have three styles of traders. First, we have the scalper, the day trader, and as well the swing trader. So these are the basic three styles of traders we have in the forex market. So you should learn to know the style of trader it belongs to in order for you to choose a particular time frame that is the best for that style of trading. So one of the first most important thing you must know when selecting a particular time frame. Like for me, I'm a day trader, so I select the time frame that is best for my day trading, that is best for me and fits my particular strategy that I use in trading. So this is what you should know when selecting a particular time frame. So first, let's talk about what is time frames. Time frames basically the time it takes for each candlestick to close. Those red and green boxes you see on the chart. So whichever time it takes for each of those candlesticks to close, that is the time frame for that particular chart. Let's say it takes 30 minutes to close each of them, that is a 30 minutes time frame. Or let's say 5 minutes or 10 minutes, that's the time frame for that particular chart. So let's say you're a scalper. You should make use of a time frame that is much lower than a day trader's time frame. And let's say you're a day trader. You should make use of a time frame that is much lower than a swing trader time frame. Now, why should you make use of a time that is much lower when you're a scalper or a day trader compared to a swing trader? Is because as a scalper, you are placing a trade to go out to that trade in a very short period of time. Now, likewise, a day trader compared to a swing trader, you are placing a trade in order to go out to that trade within that same day or in the next 24 hours, you have to exceed that particular trade which you placed. So that's why you should make use of a less higher time frame compared to a swing trader as a day trader. Now for swing traders, you should make use of a much higher time frame compared to any other style of trader because you are placing your trade to exceed that particular trade within a couple of days or weeks or even months. So right in today's video, I'm going to show you the best time frame you should be using to analyze the forex market chart, and as well how to use this time frame to analyze the forex market chart for easy price prediction. So without much being said, let me show you right on the chart. So first guys, what is time frame? For some of you don't know what is time frame. So as you can see, right on the chart, this is the 30 minutes time frame which I'm making use of. As you can see, all what you're seeing here are all candlesticks. So right on this 30 minutes chart, you can see each candlestick which you're seeing right here, these red and green candlesticks. So for each candlestick you're seeing there, each red candlestick or green candlesticks, it takes 30 minutes to form each of them, each like one 30 minutes, the next one 30 minutes, the green, this little green one 30 minutes, altogether is 90 minutes. So that means you have to wait 90 minutes for these three candlesticks to form, this green, red, red, as you're seeing right here. So for each time frame you are making use of, that's the time it takes for the candlestick to close. So that's some mistakes most of you make. A scalper, you're making use of a day trader time frame. So like a 30 minutes time frame, this is a day trader time frame. So I'm going to be showing you the best time frame that you should be using as a scalper. So as a scalper, is using a much lower time frame compared to the day trader. So first of all, let me explain what is scalping. So scalping is when you enter the trade, you are with the aim of going out of that trade in less than an hour. So as a scalper, you are aiming to take your profit in less than an hour. So you should not be trading with a much higher time frame compared to a day trader. So you should not be trading with a time frame that is very high, like the 30 minutes, 1 hour when scalping. No, that's wrong. So if you're using a much lower time frame when scalping, because you have to take your profit in less than an hour. So likewise, a day trader. So a day trader is using a much higher time frame compared to a scalper because you are placing the trade with the aim of going out of that trade within that same day. You can hold the trade. Let's say you place a trade 8 o'clock in the morning. You can hold the trade maybe throughout 11 p.m. or 12 p.m. and you're out of that trade. That is a day trader. Now, for a swing trader, it's using a much higher time frame compared to a scalper and a day trader. So the time frame is using as a scalp as a swing trader should be much higher than a scalper and a day trader. So like let's say now for a scalper, you want to scalp, which is using from the 1 minute time frame up to the 5 minute time frame. So you can analyze the chart from the 1 minute time frame up to the 5 minute time frame. You should not go above the 5 minute time frame when analyzing the chart when you want to scalp as a scalper. So now for a day trader, you should go the time frame you're using should be higher than the scalper. So as a day trader, you're using from the 15 minutes time frame up to the 4 hours or maybe daily time frame. So this is the time frame you're using as a day trader when day trading. So now for the swing traders, you're using a time frame that is higher than the day trader. So now if you're using, like for a swing trader, you're using from the day one time frame up to the weekly or monthly time frame. So if you're using from the day one time frame up to the weekly time frame. If you want to still go deeper, you can still analyze up to the monthly time frame. So because swing trading is when you place a trade with the aim of going out of that trade after that day you place the trade, or within a week, sometimes can be up to a month. So that's what is swing trading. You are placing a trade for a long period of time to take your profit. So that's what is swing trading. So swing trading requires a lot more higher time frame compared to a day trader or a scalper. So as a swing trader, you're using a much higher time frame compared to these two styles of traders which I just listed. So I'll be showing you right on the chart how you should be trading, how you should be scalping, and how you should be day trading. I'll show you right on the chart how you should analyze the chart as a scalper, and also how you can analyze the chart as a day trader. So let me show you right on the right first, the scalper, how you should analyze the chart as a scalper. Now let's head over to the 1 minute time frame right here. Let's switch to the 1 minute time frame. Now for a scalper, you want to scalp, and like I said, scalping is when you place a trade with the aim of going out of that trade in less than an hour. So right now you can see this is the 1 minute time frame. I can see each candlestick, you can see multiple candlesticks that the market just formed right here. Each of them is 1 minute. It takes 1 minute to form each of them. So each of these candlesticks takes 1 minute to form each of them. You can see we have more than 30 candlesticks just in here. Altogether is like 30 minutes. So you can see that. Now, so as a scalper, you want to analyze the market. Let's say now you can see how you can analyze the market. You want to take a sharp entry, so because you want to take a profit in less than an hour. So you want to take a sniper entry, you want to scalp and make a profit quickly and just go out of the market. Now you can see right here. Now let's say you spotted this trade. Now you can see looking like a double bottom strategy, and you spotted this trade. You had a breakout right here. Now you can see the market broke out on a 1 minute time frame. You can see that. Now you can see the market was just heading to the upside. Now if you go over to the 5 minute time frame also, now you can see we had a very strong bullish candlestick closing this bearish candlestick, this red candlestick. We have a very strong bullish candlestick that closed this bearish candlestick. You can see that. We also had the breakout also. As you can see that the top breakout, the market was just heading to the upside. Now let's head over to the 1 minute time frame again. Now you can see that you analyze the market and you just take your long position right away. Now boom, you take a long position right here and just put your stop loss. You can just put your stop loss down below, and boom, you're starting to take your profit. Just let's say right at this spot, as you can see. Now you can expect to take your profit. Let's say right at this spot. Now you can see that. Now on the 1 minute time frame, now you're starting to take your profit. Now at this top corner, at the top resistance corner right here, you can see that you just analyze your scalping in less than an hour. You want to just go out of this trade. This is how you can scalp as a scalper. You can see that this is how you should analyze the market as a scalper. Look for a sniper entry, boom, and you expect to take a profit just in less than an hour. So this is how you should scalp like as a scalper. So now, like I said, it's using the 1 minute up to the 5 minutes time frame as a scalper. So I'm going to be showing you how you should analyze the chart as a day trader. So now let's head over to the daily time, let's head over to a day trader time frame. Now let's head over to 30 minutes time frame. Now you can see that. Now this is a 30 minutes time frame, as you could see. As you can see that this is a 30 minutes time frame, as you can see. Now on a 30 minutes time frame, you could just, let's say you just spotted an entry, or let me go head over to, so now let's head over to gold pair right here. Now switching over to gold pair, and I'm making use of the 30 minutes time frame because we are now on a day trader style of trading. So now I'll show you first the scalping style and the time frame you should be using, how to analyze the market. Now this is a day trader style of trading. Now you see that on the chart you will see that now as a day trader, most times the trade you should be trading is support and resistance breakout. So as a day trader, most times the way you trade is by trading support and resistance, expecting the breakouts, and you just trade. Once you see the breakout, you take either a short or a long position, and you just make your profits and you're out of the trade. So within that same day, so that's a day trader. That's the way you should be trading as a day trader. Now, as a day trader, now you saw a breakout, boom, and now you just take a short position. You can hold that trade within that same day. You can see that you can hold the trade within that same day. You just go on a short position, just put your stop loss. Let's say put it right at this spot, right at this spot. You can see that you now you just take your profit. You can see your put. So this is how you should be trading as a day trader. You can see that. So as a day trader, you should hold a trade, let's say within that same day. You can place a trade aiming to go out, let's say above an hour, 2 hours, or within that same day. Before the day ends, you close the trade. So this is how you should be trading as a day trader. Most times it's mostly support and resistance. This is how most of us day traders we do trade. So like I said, as a scalper, I've just showed you the time frame you should be using from the 1 minute up to the 5 minute time frame. This is what is best for you as a scalper. So like the day trader, you can trade. You see the 30 minute time frame. You can make sure the 30 minute time frame. You can even now switch up to the 15 minute time frame as a day trader. You can see we still have the same trend formation. You can see that we still have the same trend formation right here. Now you can see that the same trend formation, the same trend line. Now we switch over to the 1 hour time frame. You can still see that we still have the same trend formation right here. You can see that the market still did the same thing. Just like that, you can switch over up to the 4 hours or the day 1 time frame. So as a day trader, so these are the time frame you should be using as a day trader. So like I said, swing trader, you should be using up to from the day 1. As you can see, as a swing trader, using from the day 1, like from this time frame, just like this. You can use from the day 1, week 1, month 1, just like that. So these are the time frames you should be using as a swing trader. So guys, I've just showed you the best time frame that you should be using, whatever style of trader you are. So make sure you make use of this time frame if you are any of this style of trader, whether the scalper, day trader, or swing trader. So the time frame that just listed right in this video, you should be making use of these time frames in order to have a clear prediction of price, a clear analysis of price movement. So guys, thank you for watching. Make sure you subscribe and turn on the notification bell to be notified each time I post a video. See you on another video. Peace out.